right, welcome back. Thank you so much for staying with the Morning Cafe. It is a full Feel-Good Friday, but this morning we want to talk matters asset financing. Of course, just leveraging asset financing to achieve growth. And of course, the ability to access productive assets without upfront capital is reshaping how individuals and business grow. And this morning, Kimani Njagi, that is head of vehicle and asset finance at Stanbic Bank of Kenya, is here to help us talk about that, just to tell us how banks, are helping Kenyans leverage this financial tool for real scalable growth, and maybe what gaps remain. Karibu sana to TV47, Kimani.
Good morning and thanks for having me.
All right, I want us to start first of all for the benefit of our viewer, to begin with explaining what asset financing is and how it works exactly.
So, asset finance is a type of lending where businesses or individuals use assets such as vehicles, machinery, equipment as collateral to acquire funds for their businesses. It could be either you already own the asset or probably you want to buy asset that you don't own so that you can utilize it for personal or business use. How it works is that if you don't own the asset, the first journey is to identify that asset. So you'd go to the supplier, have a discussion as to what asset you want to acquire, what price will they charge. Then after you have had that discussion, they'll give you a document called a pro forma invoice. Then you'll approach your lender or your bank with that pro forma invoice and the other relevant documents to lodge an application. That loan application, if approved, then you move to the next step, where is to do security or perfecting to ensure that if it's a vehicle, it's jointly registered between the two parties, and if it's not a vehicle, probably it's a machinery or equipment, then a specific debenture is done. Then after that, we pay the supplier, or if you had already were owning the asset, we will credit you. So basically that's a process, how it works, but in a nutshell, it is a structured lending facility that is short-term in nature or mid-term in nature in terms of tenure, that facilitates acquisition of asset or utilizing of asset value to get working capital funds against that.
Yeah. So even as we get that out of the way, so now why should individuals and maybe businesses as well just tap into this asset financing as a tool for growth for whatever they're dealing with or they're trying to boost?
So there are multiple benefits of taking up asset finance. The first one being you want to preserve cash flows or capital. As you know, cash is king in business or even in running your own individual matters. So in this essence then, what we are saying is you're preserving cash flow by the fact that you're only, if it's a vehicle or an asset that is costing you 10 million and you're only required to raise 10% or 5%, you're only raising probably $1 million out of the 10 million. The other one is it enables expansion. Think of a business that wants to expand. You want to acquire a fleet of vehicles because there is a lot of demand. Asset finance does help you to achieve that. Then the other one is access to modern equipment. There are different structures where you can actually, like under leasing, retire the older equipment and acquire a newer equipment that is more efficient to serve your business or to serve your customers. Then there is the issue of tax advantage. In an operating lease structure, the lease rental is tax allowable. So it comes, asset finance then comes in with also the benefit of tax implication or relief to paying lesser tax liability.
Yeah. So maybe you could also tell us the current state of asset financing in the country from where you sit.
So currently in Kenya, there's been a lot of growth in that in the space of asset finance. There are multiple players in it. There are many structures. I would actually place the structures that currently are prevailing to probably the fast economies. We have different structures, the most common structure being hire purchase, where a borrower taps into borrowing for an asset with the ultimate intention to owning it. Then we have what we call leasing, where there is 3 parties into it. There is a lessor, a leasee, and then there is a financier. In this case, the leasing structure, the borrower really doesn't have to own the asset at the maturity of the loan facility. Then we also have asset refinancing. So under the structure of hire purchase, if you already own the asset, we call it asset refinancing, or you'll see most other people advertising it as logbook loans. Then under leasing, we have what we call sale and leaseback, because you already own the assets and you want to draw value against that asset.
So maybe you could also tell us how asset financing, how it differs from traditional lending, especially for those that are first-time borrowers.
So how it differs is that, first of all, to note is that the asset that you're borrowing is the collateral. You really don't require to get another security for that borrowing. The asset that you're acquiring, or the asset that you're drawing value against, is what secures that facility. Secondly is that under the structure where you don't know the asset, the funds are paid to the supplier and they are not paid to yourself. But in case you already own the asset and you're drawing value, you are refinancing, or it's a sale and leaseback, then the funds eventually are paid to yourselves. So those are the main differentiator between normal lending or what bankers or financial sector people would call vanilla lending versus asset finance. And important to note then, and asset financing also, the other structure differentiation is that you can structure it to match cash inflows. Think of a farmer. Think of a school. You'd definitely structure repayment under asset finance. If a farmer probably receives their cash inflows twice a year, then the repayment would be twice a year. If it's a school, they would make repayment termly as schools reopen, or any other nature of business. And I know, of course, there is a lot of competition in the banking sector. So maybe what are you doing at Stanbic Bank that distinguishes you from other banks in terms of asset financing? So Stanbic is one of the leading banks in the spaces of asset finance. So 3 unique initiatives that we've taken is that we are pre-qualifying our customers. If you hold accounts with us, we pre-qualify you for asset finance limits. Number 2 is that we have come up with very well-structured partnerships with different suppliers in this market, to an extent that we are able to get value in terms of structures like interest subvention, levels of financing, and extended tenure. Stanbic also is able to provide up to 100% financing. We have a proposition called data banking. Like I said, you are pre-qualified. If you are pre-qualified, then you can be able to access the 100% financing. Also, another important advantage that Stanbic has put into play in terms of innovation in this space is we have stretched repayment. You can repay your facility for up to 72 months, noting the challenges that are there in the market in terms of liquidity. And importantly also to note is we've implemented risk-based pricing, where your interest rate that Anne would enjoy and what I would enjoy would differentiate depending on what risk grading have been put at. So how do you also just assess risks when giving out the money, or for assessing eligibility in order to mitigate risk as well as Stanbic Bank when giving out asset finances? So the first thing when you're looking at risk is know your client. So basically getting to understand what nature of business are you running, looking at industry. We have expertise in knowing what industries we expect to grow, which ones are having challenges, and we can structure facilities in terms of that recognition. The second thing is we do also have expertise in understanding the assets that customers are acquiring. So that's the other criteria that we look at in reviewing credit worthiness. Then the other thing is repayment capacity, not only recognizing the current cash flows and your current status of liquidity, but also future. Do you have contracts that we expect to be to bring in enhanced repayment capacity or inflows? So in a nutshell, those are the main key things that we look at.
And we also know that access to financing, of course, remains a hurdle for many entrepreneurs in the country. So what are you doing as Stanbic Bank to ensure that this is, accessible to each and every business owner? Everyone can literally access asset financing through Stanbic Bank.
So we are one of the few banks and a lead into not only utilizing bank statements that you have to have an account with us, but also we can utilize others even if you don't bank with us. So we just require you to provide us with your bank statements from another bank. Secondly, we do also recognize M-Pesa statements as part of data to view your capacity to be able to repay the debt. So that then ensures that we have a wide coverage of customers, probably those that can't be able to access banks. Secondly, the other initiative that we have is continued growth of our partnerships with our suppliers. We are not only partnered with local suppliers, but international suppliers. We are one of the only banks that you can be able to acquire an asset. In this country, most of the vehicles that people drive personal are used. So we can finance you a vehicle that is in either Japan or UK directly without having to have the vehicle here. We've partnered with some leading suppliers where you just provide a pro forma invoice and we are able to pay for you. Secondly, for equipment, we've partnered with suppliers of machinery and equipment overseas in both Asia, like in China. If you bring in a factory to set up a milling plant, we are able to pay for that through a letter of credit structure and retiring that to an asset finance facility.
We're looking at inflationary pressures as well. So what is this asset financing doing also to just be able to accommodate the growing dynamic market? So,
like I said, one of the things is extended tenure loan facility. So currently we've extended that by a further 12 months so that what it does, it lowers the lump sum or burden of having to make a huge installment month on month. Secondly is the issue of risk-based pricing, and also ensuring that we've waived our loan processing fees. So at the moment, Stanbic is not charging any loan processing fees, just so that we can lower the challenges of inflationary aspects that are there.
So does this make it more accessible or just more structured?
It does allow access in terms of, by the time a business is making a decision or an individual to buy an asset, one of the key question that they have to answer or they have to work out at the back of their mind is, how much will I be repaying? And how much cost will it incur me to acquire these assets? So that's what it does try and manage for the customers.
You mentioned something about partnerships and how important it is in this business of asset financing. But let's say the equipment suppliers or these vehicle dealers, what role do they play in enhancing now asset financing offerings?
Number one is with the partnerships that we have been very keen and strategic to ensure that we are partnering with the right partners. So one of the key roles they play is to ensure that a customer gets quality assets. Number two is professionalism. Remember, once this customer acquires this asset, they'll need it not only for the period of the loan facility, but far and beyond the loan facility. So they'll need someone who can service this equipment, someone who can help them in maintenance, someone sometimes who can guide them in terms of usability. So one of the key aspects of us coming into partnership and the key role that our partners play is to ensure that they walk the customer the journey of usability of the asset at the time of the loan tenure and far and beyond, and even ensuring that the customer is able to scale and acquire more.
So there's also confusion around ownership. So at what point, does the client truly own the asset?
So at the period when the loan is running, the asset is jointly owned between the bank and the customer. So immediately the facility is repaid and you've repaid it fully, then what happens is that the bank does facilitate the transfer to the borrower, so that now they ultimately own the asset. But in a nutshell, you will have to have matured to pay the facility, fully paid off the loan facility, so that you can own the asset. Yeah.
How do you handle repossession cases, assuming that you people have, gone through this either once or twice in the process of you just giving out asset finances?
So in every journey there will be challenges, and what we encourage our customers is, in case then you are facing challenges in terms of repayment, speak to your bank. We have different solutions of ensuring that we manage that. That could be restructuring of the facility. It could be giving you a grace period, or what we call a moratorium, just so that there's a breather in terms of repayment, just to ensure that then it does ensure that you are able to continue repaying your facility. And also we can restructure to ensure it matches cash inflows. But in the extreme position then, where there is default, what we do is there are normal notices that we have to give. We have engagements to make phone calls, ensure we've written letters, and if in extreme positions, we do also visit customers to just check what could be ailing them not to be able to repay facility. But in the unfortunate position that you are fully not able to pay, what we do is we have agents who take up the vehicle, take it to our storage yard, advertise the same in the dailies and in our social pages, so that then we get competitive bidders buying these vehicles. In case the defaulter or the person who's not able to pay has a customer who is also interested to buy, we are open to facilitate that. But just to confirm that repossession do happen, and we have, in unfortunate position, sell the vehicle. In case of shortfalls, then we still have to follow up for that debt to be settled. And in case of there is more than what the debt balance was, we are able to refund the customer.
I don't know, maybe somebody is watching and is wondering, in case a repossession is done, does the previous owner get their money back, or now it gets lost like that?
So, like I've said, is in case the proceeds that we've sold the vehicle go far and beyond the loan balance, we are able to refund the principal borrower. Yeah.
You also talked about interest rates, and I know they are increasing in the global market in general, but what do they look like in numbers exactly, and how are they attractive to the local citizen? So as Stanbic, one of the biggest advantages and decisions we've made is that we are pricing our customers on risk-based basis. So depending on how your history is in terms of repaying debt, then we charge you a differentiated price, and we are able to pass a benefit to those customers that are less riskier. Far beyond that is that we've also implemented pricing pegged on 182 T-bill rate. So we do 182 T-bill rate plus a margin, and this margin is what is risk-based and differs from one customer to another. Yeah. So what do you think is the most misunderstood aspect of asset financing from the customer's point of view?
So one of the aspects that is really misunderstood is that it's the bank that makes a decision what you ought to buy. No, principally, the rule of asset financing is that the customer understands their need. So the engagement as to what to buy, where to buy from, that principally sits with the customer. Well, the bank does play a critical role in guiding the customer, and that's why we have partnerships as to whether that asset would be the right one, but the initial decision is for the customer to make. Think of it if you are in agriculture or someone else is running a manufacturing farm. The acquisition of which truck you want, or in a construction industry, will differ. So principally the decision as to who and what to buy from and at what price to pay, that squarely sits with the customer rather than the financial.
There's this question of whether asset financing can be used for green or sustainable investments, say such as the solar energy equipment or electric vehicles as well.
Yeah, so Stanbic is one of the leading banks that has come up with a solar proposition. So currently, we have a very competitive proposition out there in the market, and we have done very successful projects. Currently, we are able to offer facilities repayment of up to 10 years. Remember, one of the biggest challenges in our country is not access to power, but cost to power. So what we've done is that with our refinancing, with our financing projects, our proposition for solar is that we've stretched the repayment so that the amount that you pay to the current power supplier, which is Kenya Power, would be lower. Secondly is that we've also reduced as to how you can access this facility. We've made it a bit simpler with the appreciation that we do appreciate that power is a critical enabler of business. So we are more, we are more easier to ensure that you access this, having not to provide a lot of information. For SME businesses, you actually just need to provide bank statements for us to review your capacity to access solar facilities.
Talk to us about turnaround time, from the application to asset delivery. What is the average timeline, and where are the bottlenecks that you would point out?
Right, so we also pride ourselves to having a very competitive turnaround time. And, currently we are able to, if you lodge an application today, in 3 days we are able to give you a response of a yes or no. So then that ball passes on to the customer to ensure they perfect the security. But in average, in 2 weeks, if everything is in place in terms of what you need to provide, you should be able to have your vehicle on the road or an asset on being used. However, one of the bottlenecks that is there is at times customers or people providing, or the seller of the assets, information in piecemeal. So that also does bring in a challenge as to ensuring we are able to deliver the quickest turnaround time. But with our continued partnership with the suppliers, we've upskilled them in terms of what we require. We continue to engaging also our customers in different forums to equip them as to what would be expected of them to provide, so that then we can have a very competitive turnaround time on all applications that come our way.
So Kimani, for our viewers who are watching and they want to maybe just explore or have questions to ask you on the side, where can they now find you as a Stanbic Bank and as Kimani Njagi?
Yeah, so we have about 32 branches in Kenya. So you can walk to any of our branches, and we have people who are fully well equipped to engage you on any asset finance requirement that you may have. Over and above that, our head office is at Westlands Road, Pushotown Place. We have a huge floor there where we have asset finance specialists who you can engage. We also are in partnership with a lot of our dealerships and partners who have our documentation. We've trained them as to what would be required of Stanbic in case you need to acquire these assets. You can also reach out to our telephone numbers as you pick them from our website. You can also drop us a message, and then someone will get back to you.
Great, thank you so much, Kimani Njagi, that is Head of Vehicle and Asset Finance at the Stanbic Bank of Kenya, talking to us about leveraging asset financing to achieve growth, and of course courtesy of Stanbic Bank Kenya. Thank you so much for making time. We take a short break at this point. Feel Good Friday.